Well, hello guys, it's the Green Guy again. That's my handle on StockTwits and Twitter, or Green Guy Finance is what my at's on Twitter after today. And gonna go through some of the plays of the day. As I tweeted out to some of you guys, the list is up there right now, but gonna change things up a little bit as I'm doing these videos and getting a little bit more feedback. Gonna incorporate things a little bit differently. So today we're throwing in actually a couple of your stocks that people were looking at today that they were just looking for help or advice, and show you how I would have played them. In addition to that, go through a little bit of more forward-looking plays, which is what I really like to get into anyway, because looking back is fun, but looking forward is where you make money. So we're going to be doing that more and more and more. Going through the macro here, had an interesting day, going to discuss that. Made my 80% today on profits. Going to tell you exactly how I did that. I made that on the indexes, particularly the SPY here, and going to go through that explicitly so you understand that using something called the strangle option. And going to add something to this list that's on your screen there in addition, which is TKMR. So Ford, GM, ADHD, First Solar, Tesla, Solar City, CLFC, ChinaNet, GoPro, Amazon, Pandora, Zillow, and Netflix. Fantastic. Oh, I'm tired. This is going to be a quick macro sum up, I think, because we had it all hammered out yesterday. So increments of dailies is what I'm going to be looking at for all of the macro plays here. And then we're going to get to the intraday when I show you the plays of the day and some of the calls that I made. So this is all increments that are dailies if you look at the bars here. So our thesis from yesterday held true today despite the fact that it bounced out of range a little bit, bounced back very quickly. You could see that from the price action as early as pre-market. What did we say yesterday? We are in a bull market that is trending downwards in a choppy fashion, which means that you had to be careful because it's going to be volatile, and it has been volatile, and you're going to have movement, and we have had movement, but you have to keep in mind the overall thesis that we're going through, which is we are trending downwards. Said yesterday we're trending down to the 190s. Have no reason to think otherwise yet. Still believe that we're going to see some downside. I have no position on that long term, but I don't see a reason why it might not pay off. If you want to take that, do it at your own risk. I am playing the intradays for the most part because it's much easier to make money that way. Taking a look at the chart here, going through again the volume. Want to say one thing about today's volume, which was we had a bigger red bar than yesterday, but we had a nice consolidated trading range compared to yesterday. That's something to keep an eye on. It tells you that this was a heck of a fight here today, and one of the reasons for that might be the weakness in the Russell. Going to go through the Russell chart here on the daily first before I do the intraday, like I said. Russell's been ugly. There's nothing else to say. It's the red-headed stepchild that just keeps popping its ugly head up and refuses to find a bottom. So it could be dragging everything down much further. I don't think so. Some people think that. I really don't think the Russell's going to break too much lower than where it is. I think today one thesis is, and I think this is part of it, is that tomorrow is when a lot of the big institutions have to readjust their holdings for their clients. We're at the end of the quarter. That could have been part of what you're seeing the last couple days, not just today. The Qs, again, the Qs have been leading with the Russell as opposed to the SPY and the DI and the Dow Jones Industrial leading. It's been continuing to be the thing that you have to watch first. Russell and Dow, Russell and the NASDAQ, the Qs, that index is what you need to keep an eye on for intraday plays for the most part. The SPY here, like I said, continuing our trend. I think we're good to go. That mentality for tomorrow, same as it has been. Take a look at the treasuries here real quick. If you watched the video yesterday, I said bearish view on the treasuries because the unusual futures volumes were exceptionally bearish, which means what? Somebody is making a bet on the interest rates change, the hike coming sooner than expected. That's why you probably saw some of this here today. Not a huge movement. We're still in the 116s, which is high for historical purposes. Here is going back to the daily charts, the daily increments of the Treasury here. So we've had up. Seems to be that we've hit a little bit of a snag. I don't know exactly which Way is the ideal. Are you going to take a short or go long on it on the upside? Hard to say. It's a bet on the Fed policy, which I think is a hard bet at times. You know what's coming eventually. How long you're going to have to take a position out to get paid, it might be a toughie. Oil of note here. Yesterday we looked at it in the uptrend. Huge problems in a lot of commodities today, not just oil. Something to keep an eye on. Gold and silver still are doing horribly. Oil, huge sell-off that ruined our solar thesis that we should be looking for catalysts in the solars, because why? If oil is expensive, people will look to alternative energies. Not going to be doing that in the near term, so I'm not looking for catalysts in the solar cities and the first solars. More looking to the downside, more so than previously. So that is our sum up of the day. Going through the plays here, how I made my 80%. So pre-market, like I said, was a bit of a tell here in the SPY, the S&P 500 index, because it did not find a support line. We had a couple touches, which made me think at about 45 minutes previous to opening, we had a place that it would bounce off or at least react to. And what happened pre-market is somebody dumped and dumped and dumped and dumped and dumped. So we had this nice opening up 60 points up to, we opened where we did, which was not ideal. If you see it right there, we barely opened off of the previous close. So it looked extremely bearish from the pre-market. That was enough, given that and our long-term thesis, for me to say we're probably going to open up down, because the line that we had established for the long term, we were butting up against it right in the morning. So downside is there to be taken. If it was going to touch that line, it was just going to test it and not go too much further. Downside is there. Risk reward, how much higher can it go? Not that much. How much lower can it go? TBD, to be determined. So easy put right out of the gate. But with the chop we've been having and with today's quarterly options expiring, it gave me an interesting opportunity. Here's some of the calls that I said I would incorporate here. The Twitter calls could be interesting today. The SPY dropping in the pre-market charts. As I said previously, today could get ugly. A lot of the plays today were not looking great. And then coming over here, this is basically what I was saying. This is a point I made 25%. But like I said, I did make a good 80% there. How did I make my 80%? Going to show you. So this is the quarterly options which expire today. Strangle options are basically if you take a position that is two different strike prices. I like to strangle indexes, one out of the money or two closer to expiration, one, because you're most likely for it to go in the money. Your goal is that you have a big movement up or down. And if you have a big movement up or down and the prices on those are shredded to close to the intrinsic price of the option, you can double very easily on one side. So what I like to say is this. If you have $1 on the put side and $1 on the call side of the option, and it doubles one side and the other side goes to almost nothing. Take that for example. So it dove in the morning and my side that has the dollar that represents the put now has $2 in it, right? And then the other hand has 50 cents where it used to have $2. What's my profit for the day? I started off with $1 in each hand. Now I have $2 in one hand and 50 cents in the other. It's a 50-cent profit. $2 was my cost basis. I made 25%. That's pretty much what happened in the morning. One side of my play went to 25%. The other side doubled, paying for the cost basis. So at that point, I sold out of my put position and just held the other side to see what it would do and was hoping for a boomerang type play, which today could have easily been a boomerang. We've had that so many times this week where we've had a massive reversal. So coming back to the charts here. Oh no, I wanted to show you this. So sorry, going out of order. So this is basically the one out of the money at the open for the call side. 10 o'clock was the reversal point. You can see it right there. So opened up high, went low. Here's the put side. Opened up low, went high. So you could have gotten in for about 25 cents. It went to 53 cents there at the top of it, making for a nice strangle play. There's my $2, the double being the $2. And here's my other side going down from the 20-cent level to the 7-cent level. So you can see what I'm referring to is basically at that point you can cash out your day for a gain. At this point I didn't. I sold off my put side thinking I think the worst is done. There's no major catalysts for a sell-off here. Let's see what happens. And then what happened? We had a nice little rebound. I thought we had sort of seen a little bit of a top, some resistance, and that's when I sold out a little bit higher. So I made my 80% pretty easily just by the one side coming back to half of its value. And that's exactly how it comes out. So that's a fully hedged, double-sided position balancing out so that you can play a big play. How do you lose money on a triangle like this? Is if the market goes flat. Why? Because it's expiring today. I have two options that if the day ends without movement, my options will go to zero. So you got to watch it because you will get burnt on theta, time decay. But that's it. As long as you think there's going to be a big play, explosive day, this is the perfect environment for it. And when options are closer to expiration are ideal because that's when you have no theta, it's mostly trimmed off, you're seeing mostly intrinsic price in the price. You get it as close as you can to the actual exercise price of the option. So that's how I made an 80% right out of the gate just with a macro analysis without even looking at the stocks here today. But we are going through some stock plays because there was some interesting ones. Ford and GM, we went through yesterday. Ford and GM, if you followed yesterday, should not have been surprised by today's daily chart, which was ugly as can be. Ford had that nasty sales report and guidance lowering from yesterday. GM had that we are more deaths than expected, and they're paying out more for the recalls. That came into play today. Look at the long-term charts in both of these, which is going to be actionable here coming up very shortly. So this is Ford taking a 6-month chart and extending it. You can see way back here, it's got a double bottom forming in both charts, Ford and GM. The sector is getting a double bottom. So keep a very close eye on this. It could bounce upwards, or if that sucker breaks, it could go much lower. So if you have a macro that tomorrow is either way enormously in one direction or the other, these are two plays you could absolutely look for. ADHD here. Interesting for the fact that it has had, since Monday, a bit of a sell-off without any major news. So this is intraday volumes here that you're seeing here. This is the 29th. This is the 30th. And you're seeing that it's still sort of forming a base. I might be one of the few people who are bullish on this biotech stock because I think that their drug will be passed safely, and it's a vitamin derivative, which improves attention in ADHD people. I think it could work. I will be watching this as data comes out in the next week or two for an entry. First Solar here is interesting. If you take a look at the chart here, because it's broken down, we talked about the solars looking particularly weak. See this line is butting up. It could easily go lower from where it is. Keep a close eye on that solar. Same with Solar City. Solar City is in a downward channel. Look at that. It could easily go much lower. It's not in the bottom part of a downward channel. It's at the upward part of a downward channel, which means that it could have a precipitous fall. Very close eye on Solar City. Tesla, same thing. This one could go explosively. This is a triangle formation that's going slightly downward. Tesla will have a major movement upcoming very soon because this is about to break open. Keep a close eye on it, and if you're on the right side, you'll make a lot of money. Look for catalysts and news and the macro, like we keep saying. CLF here. CLF, somebody asked me how to analyze this for a short. Basically, this is what I said to him. I said, look at the pivot levels that are defined by the price action. It's just computerized, comes with free stock charts. Put it on, pivots, comes down here. So basically, you see the price action. It broke through support, stayed lower, butted up against it. At this point is where I would have bought a short because at this point, it's got a resistance line and it has to go through if it's going to go higher. Broke through a little bit, went lower. But look at this. Now we got a trend line. So at this point, for my exit, I would just go off the trend line. You see the opening and the previous close here. Those, it kept going lower, broke through those. No issues, no issues, no issues. Almost the other day when it broke. And at this point is when I would have covered. That's an easy play for a short. I would not have probably played it up here because it's a little unpredictable. I like safer things. That's how I would have done that. CNET here. Still, we went through that yesterday. It's got a lot of short action on it. It's going to be volatile. GoPro here. Had Citron come out with a report. Had a nice little short squeeze towards the end of the day. Again, what's the lesson from yesterday? Don't short GoPro. Pandora here. Pandora is in mid-channel. It bounced down to 23s and up. Keep a close eye on it because Pandora is getting very cheap. Could have a bounce upwards. It's hard to imagine it going much lower than it is. Netflix here, bottom of the channel. Big upwards play. Keep an eye on it. Amazon here, downward. Seems to be basing. Keep an eye on that for a bounce up. Zillow, downward channel. It's good for a put play if you need it. TKMR, if you missed it, after hours, Ebola's in the U.S. It's going to probably be a huge actionable play tomorrow. It's in the 26s. Take a look at the long chart here, which is we got a double top right about 26s. And that's your plays for the day.